Welcome to Vanijja. Today, we're diving deep into one of the most critical aspects of international trade finance, selecting your advising and confirming banks under a letter of credit. This is your beginner's guide to mastering the fundamentals. Hello, everyone, and a warm welcome back to the Vanijja channel. If you're new here, we break down complex trade finance topics into easy-to-understand steps. We're thrilled to have you join our learning journey today. Have you ever wondered who truly guarantees your payment when shipping goods across continents, especially when dealing with buyers you don't fully know? That guarantee often lies in the choice of banks involved in your letter of credit. The problem many beginners face is simply this. The process of selecting which bank handles your LC seems complex and arbitrary. It often involves jargon and steps that aren't immediately clear. We're here to simplify that selection process, making it logical and easy to follow. By the end of this video, you will confidently understand the distinct roles of the advising and confirming banks, and most importantly, have a solid checklist to make the best, most secure choices for your international sales. Our goal is to transform you from a beginner into an informed decision maker. Our journey starts with a quick recap of LCs. Then we will define the key players, dive deep into the advising bank's role, explore the added security of the confirming bank, and finally, wrap up with our essential pro tips and checklist. Let's start with the basics of LCs. Before we talk about choosing banks, let's establish what a letter of credit, or LC, is. Simply put, an LC is a written promise by a bank, on behalf of the buyer, to pay the seller a specific amount of money. This payment is conditional, meaning it happens only when the seller provides documents proving they have shipped the goods as agreed. Think of an LC as a neutral third-party guarantee. Instead of relying solely on the buyer's promise, the seller relies on the issuing bank's promise. This drastically reduces the risk for the seller, especially in cross-border trade where trust can be difficult to establish. The selection of the banks involved in this process is vital. Choosing the wrong bank can lead to payment delays, communication errors, and unnecessary complexity. The right choice ensures trust, speed, and smooth communication between all parties. Now that we have a grasp on LCs, let's see who the key players are. In an LC transaction, there are four main players. Understanding their roles is the first step in understanding the entire process. We'll focus on the three banking roles and one trade party. First, the issuing bank. This is the buyer's bank. They are the ones who officially issue the letter of credit, making the promise of payment to the seller. They are responsible for examining the documents presented by the seller. Second, the beneficiary. This is simply the seller who is receiving the payment. They are the ones who benefit from the LC's guarantee, provided they meet all the documentation requirements. This leads us directly to our next key idea, the advising bank. This bank acts as a critical intermediary in the communication chain. Their role is often referred to as the messenger. The advising bank's job is straightforward. They verify the authenticity of the letter of credit received from the issuing bank and then officially deliver it to the beneficiary, or the seller. This ensures the seller knows the LC is legitimate. Think of the advising bank as a trusted, high-security postal service for your financial documentation. They make sure the important document gets from the buyer's bank to the seller, safe and sound, while confirming its authenticity. Now that we understand the advising bank's function, let's explore how the selection is typically made. It's usually a decision driven by established relationships. The issuing bank usually prefers to route the LC through their own branches, associate offices, or established correspondent banks. Why? Because arrangements for message authentication and clear lines of communication already exist, ensuring speedy resolution of any issues. However, the beneficiary, or seller, may indicate a preference for their local bank. If this chosen bank isn't a direct correspondent of the issuing bank, the LC might be advised through an initial advising bank, who then forwards it to the seller's preferred bank. The seller's bank then becomes known as the second advising bank. We now move to a role that adds a powerful layer of security, the confirming bank. This is where a major decision about risk mitigation comes into play for the seller. A confirming bank is simply a bank, usually located in the seller's country, that adds its own separate, irrevocable promise to pay the seller, provided the documents are compliant. If the issuing bank fails to pay for any reason, the confirming bank steps in. Confirmation is usually requested when the seller has concerns about the creditworthiness or stability of the issuing bank, or if there is political or economic risk in the buyer's country. It shifts the payment risk from the issuing bank to the confirming bank, providing peace of mind to the seller. We've covered the fundamentals. Now, let's get practical with the essential pro tips and a simple checklist for making your bank selection. Checklist item number 1. Always prioritize banks with a strong correspondent relationship with the issuing bank. This guarantees speed and established authentication. Secondly, choose a bank geographically convenient to the seller to facilitate easy document presentation. Here's a crucial pro tip. While confirmation offers high security, it comes at a cost. Confirmation fees can be significant, so evaluate the risk versus the cost. If the issuing bank is highly reputable and the country risk is low, you might opt out of confirmation to save money. We've reached the end of our guide. Let's quickly summarize the key differences one last time. The advising bank is the verified messenger, ensuring the LC is real and delivered. The confirming bank is the guarantor, adding its own payment promise to mitigate risk. Understanding this distinction is power in trade finance. Always choose your banks based on 3 pillars: trust, ensuring legitimacy; speed, through established correspondent networks; and security, by using confirmation when needed to mitigate risk. Thank you so much for watching this essential guide on letter of credit bank selection. If this video helped clarify the process, please give it a like and subscribe to Vanijja for more beginner-friendly finance content. We love hearing from you, so leave your questions and comments below.